Hey, what is going on everyone? My name is Nick Peich, and in today's video we're going to be analyzing CNR stock Canadian National Railway to figure out if it's a buy to beat inflation in 2022. Recently, the inflation report for December of 2021 was just released, and we saw a record 7% inflation year over year, being the highest level since 1982. However, railroads are known to have excellent pricing power during times of inflation, so this could also mean that railroads are a great investment right now. In fact, CNR just reported their Q4 2021 earnings, and needless to say, they were incredible. So today we'll be taking a deep dive into their latest earnings report to see how the company is truly performing and guiding amid these inflationary times. Anyways, if you do enjoy this video, don't forget to drop a like, and if you haven't already, please consider subscribing so you don't miss any of our future uploads. But with that said, let's jump straight into Canadian National Railway stock. Alright, so first a little bit about the company. CNR is Canada's largest railroad and one of the biggest in North America, where their reach spans from coast to coast across Canada and also down south through the middle of the US. And because of their super wide moat, CNR stock has done incredibly well over the past 5 years and over their all-time history. However, over the past month, CNR has been trading for a bit of a discount, where the shares are down about 7% from all-time highs. And although this isn't a massive dip like we're seeing with some tech stocks right now, it makes sense because CNR's business is booming and the stock hasn't shown many massive dips over the past few decades, as this company has had a solid competitive advantage. So in short, buying any dips in CNR stock has proven to be quite profitable over the long term. But now let's jump straight into CNR's Q4 2021 results to get a better understanding of how they're doing. So on January 25th, CNR reported their Q4 earnings for 2021, and for the full year of 2021, CNR increased its adjusted diluted EPS by 12% to $5.94, while it was able to generate an adjusted return on invested capital, or ROIC, of 15% in the second half of the year, which means their investments are paying off big time. As for Q4 alone, CNR grew its adjusted diluted EPS 20% year over year to $1.71 per share, while its adjusted operating ratio reached a new Q4 record of 57.9%, which is simply the operating expenses as a percentage of their revenues. And that's because they were able to reduce operating expenses year over year while still increasing revenue 3% to $3.75 billion, so I think that's incredible. And a big part of this expense reduction comes from a lower employee count compared to 2020, where CNR reduced its employees by a total of 1,800 people down to 22,604 employees. So this is demonstrating that CNR is becoming a leaner organization, and they're confident they can maintain their revenue growth rates despite having a lower employee count, which is obviously good for margins. Moreover, CN's outlook for 2022 is to deliver 20% adjusted EPS growth again over 2021 levels, which I think is just insane for such a large and established railroad. But as I said before, with higher levels of inflation, railroads tend to benefit from this, so that is one of the main reasons why I think CNR is such an awesome buy on this dip. For example, here we can see that CNR continues beating levels of rail inflation, excluding fuel costs, by increasing their same-store prices across all business segments. Now, another thing you should know about CNR is that they are a dividend-paying stock, and they're actually a dividend aristocrat, meaning they've increased their dividends for over 25 years consecutively. And in the latest quarter, CNR made a bold move and increased the divvy by 19% to 73 cents per share, marking the 26th consecutive year of dividend increases, which is nothing less than remarkable. And I believe this huge dividend increase just goes to show the confidence management has in the business's years to come. Finally, the company also announced a new share repurchase program, which is yet another way that CNR rewards its shareholders. Throughout 2022, CNR plans on buying back 42 million common shares, which represents nearly 6% of the company's entire float. Overall, I couldn't find a single thing I didn't like about this earnings report, and it just seems like CNR is going to continue benefiting from this inflationary time we're in, which makes CNR one of the best buys here in Canada right now, in my own opinion. Alright, but now let's jump over to TipRanks to see what analysts are thinking about CNR stock. First of all, we can see here that the business has a smart score of 8 out of 10, which is very solid. And that is a result of the hedge fund activity increasing, meaning that more funds have been buying the shares in the past month than before. Furthermore, bloggers' opinions and TipRanks investors are bullish and have very positive opinions, respectively. Then in terms of the business fundamentals, CNR has a return on equity of 23.3% over the past 12 months, which is incredible to say the least, and they are certainly benefiting from this inflation. However, the only downside in this smart score is that insiders have been selling the stock. But this isn't necessarily a bad thing, because as Peter Lynch says, there can be so many reasons why insiders sell a stock, not just because because they think it's going to go down. And honestly, the level of insider selling looks pretty normal right now, so I wouldn't be too concerned about this. All right, now jumping into some of the price targets for CNR, we can see that all analysts have an average 12-month price target of $166.70 per share, which does represent 7% upside. As for the top analysts, they have an average 12-month price target of $164.72 per share, which represents 5.5% upside. However, given the incredible earnings report the company just produced in Q4, their increase of the dividend by 19%, and then the guidance being incredible, I think these estimates are quite bearish. On the high end, we can see that analysts have a price target of $180 per share, which I believe is more realistic, and this would represent 15% growth from their current share price, while their earnings in 2022 are expected to grow 20%. And here we can see that CNR has consistently been in line, if not beating on EPS estimates, where they only missed on one earnings report in the past 2 years. So obviously this could lead to some more upside in the stock if they do continue to beat on their earnings reports throughout 2022. And while the company's forward dividend yield isn't very high at 1.88%, their forward payout ratio is still very low, being only 42% based on Q4 earnings and the new dividend increase, so this could be another reason for investors to buy into the stock. Overall, I believe there are tons of positives for buying and holding CNR stock right now. First of all, the guidance for 2022 is excellent. They just had an excellent earnings report, and the dividend was just increased by 19%, so all of these are solid reasons, including the fact that CNR benefits from inflation. But let me know what you think in the comments down below. Do you think that CNR stock is worth a buy right now? And what would your end of year price target be for CNR? Could you see them beating the average analyst estimates? Anyways, if you did enjoy the video, don't forget to drop a like as it does help out our channel, and don't forget to subscribe so you don't miss any of our future uploads. And with that said, I will see you in the next one.